Now, they may appear to be the short-term answer to a cash flow problem, but with an annual percentage rate that can reach almost 2,000%, payday loans may not be a sensible solution to a money crisis.
Damon Gibbons is from the charity Debt on Our Doorstep, and Robin Amlott is the editor of the personal finance website moneyextra.com. Morning to you both. Thanks for joining us.
Good morning.
Damon, so how many people are taking out these kind of loans, and what are the reasons why they might take them out?
Well, it's difficult to say precisely how many people are taking them out at the moment, but we do know that this is an area which is expanding enormously, and particularly over the last 2 or 3 years. And one of the biggest companies which you featured this morning is Money Shop, which is actually owned by a US company, Dollar Financial. And in the last quarter alone, their lending to UK customers has increased by 45%. It's now £16 million a quarter.
Okay, so what are the reasons that people are turning to them for these loans?
Well, ultimately it's because they're already often up against their overdraft limit, finding it harder to get credit these days because of the credit crunch, and therefore having to turn to sources like payday just to make ends meet. Our difficulty with that is that clearly people are in difficulties already, and in effect becoming credit dependent on very high cost form of borrowing, which payday is, actually getting into worse trouble as a result.
Robert, it's meant to be sort of a one-off, isn't it? You know, you just need some cash right now. As a personal person, as a person, you're trying to pay, I don't know, for some school uniform or something like that, that you need the money now. That is why that service is there.
It is a useful service in the right circumstances. What you have to understand is that the smaller the amount of money you borrow and the shorter the amount of time you borrow it for, the more expensive it is. And that's a truism. It doesn't matter whether we're talking about thousands of pounds worth of a personal loan taken over for 10 years. If you try and borrow only £1,000 over 1 year, it's much more expensive. We're talking about a few £100s here over days, literally over days, because the term of these loans is normally 31 days. It is very expensive. It is an exceedingly expensive form of borrowing. I wouldn't actually recommend it to anybody other than as a last resort, but as an emergency measure, and I stress that, as an emergency measure, it is a service. It's an expensive service, but it is a service. As a borrower, you have to go into that with your eyes open, and the problem is, and this is what I think the charities are concerned about, that people really don't understand that it is an emergency measure only and not something that you're going to come back to every month.
Let me just tell you, we've got one example. Somebody emailed us in this morning saying that him and his wife are disabled, 3 kids, with everything going up in price. We got a loan for £450. They're now in a position where they're having to pay back £756. They had to buy the kids some clothes for summer. You can clearly see why people need that. So what can they do otherwise?
Well, you can. I think the problem with this industry is it advertises itself to say it's just meeting a one-off, unexpected need that month. It makes no checks, however, to see whether or not people can then actually afford to repay that when the 31 days have gone by and the post-dated checks are presented. So actually it makes a lot of money by rolling over those loans month after month after month, and people pay another £50, £70 a month fees without paying anything off the debt. People are actually getting themselves into a cycle of increased indebtedness, and that's how this company makes its, a lot of these companies make their business. We don't think that's responsible. We think they actually should check, are people already in financial difficulties such that the last thing they need is another expensive loan?
Any advice for people that are seeking maybe another solution than going to this?
This is really the lender of last resort. If you have financial problems, and if you're in the kind of debt situation that's being described, then you really should be looking for advice to get yourself sorted out. That's the first point. But the second point is this: if you really do desperately need money, you have a lot of potential sources that you should exhaust first. And of course, everybody who's got a bank account, the first thing you need to do is talk to your banker and explain the situation to them, because they will, if you're lucky, offer you the overdraft that will cover your immediate needs, which is going to be ultimately cheaper than this kind of lending. But it is there as an emergency. It's not a particularly attractive option. It is a highly expensive one, but it does provide a surface. But people have to go into it with their eyes open.
Okay.
Robin and Damon, thank you.
Thank you very much. Another email coming in as well. We were just quoting that sometimes those the loans can be almost 2,000% interest. Other people, this is Dave Parkinson emailing us saying that actually some APRs can range from 1,300% to 9,800%. So I think those warnings, people listening to them this morning. Thank you.
Thank you.